Hey, welcome to the show, Total Financial Solutions, Safer Money Hour. I'm your host today, Mr. Jeff Gerard. I just called myself Mr. That was kind of weird.
What's the alternative?
Just Jeff.
Oh, okay. Well, that's right.
And I'm joined by Richard Lewis Grant. Don't forget the Lewis in there. Mr. Grant, thanks for being here today. Author extraordinaire and my co-host.
Good to be here, Jeff.
I really appreciate it. Hey, we're going to be in Arif, Halaby, the day off today. Going to talk about your family's finances, ways you can get out of debt, manage your money, of course, plan for retirement. A big part of your retirement and your overall financial well-being, I think, is a healthy sense of insurance. Now, many people would say, well, you know, I'm an investor, I'm a savvy saver, I do well with my finances, you know, insurance is just kind of on the sidelines. I beg to differ. Now, I'm an insurance guy. I like insurance. I don't believe in over-insuring, but insurance is that thing, Richard, and we've seen this time and again. It's the thing that people wish they had more of when disaster strikes.
After the fact.
After the fact.
You know, I want to give a shout out to the firefighters who are no doubt not listening, but working really hard right now.
Amazing people.
Amazing guys who work in that extreme heat, in extreme danger, and then when the day is done, they sleep on the side of the road and do it all again. You know, I was thinking the last time we were together, last week, there was not a Sand Canyon fire.
That's right.
And what, 3 days later, Friday afternoon, about exactly 3 days after we were on the air, that started, it was reported Friday afternoon, and people's lives have changed. There are lots of people that have been majorly impacted, and that is now they are thinking about insurance.
And it's one of those things, and I'm glad you're bringing that up, because one of those things that are really on the outskirts of our thinking when it comes to our finances. It's just one of those incidentals, I think, in life that, oh, I have a home, I have a mortgage, I have, you know, homeowners insurance, I think, or it was part of that deal, right, when I signed up for the house, or I have a car, yeah, I have auto insurance, great, but nobody really that I've talked to can tell me how it works. Now, I don't expect them to if it's not their profession, no more than, you know, mergers and acquisitions. I wouldn't know anything about that. I would have to talk to someone like you who's done that in their lifetime to really get a sense of it. But mergers and acquisitions, those aren't affecting my life. Insurance can affect my life. If I drive a car in Southern California, I have to have auto insurance.
You're supposed to have.
Now, there is a little asterisk. There is a way you can circumvent that system, but you still have to have some type of coverage where you pledge some part of your finances. It's called buying a bond. A lot of people don't know that, and my auto and homeowners insurance guys may not like this, my friends in the industry, but the alternative is to take out a bond, and there's a certain amount that you have to do.
And you're basically self-insuring.
Basically, that's what you're doing. But even in that regard, there's a limit on that coverage there. And then really you're holding the bag. So insurance is probably the least expensive way to transfer risk, financial risk, away from you. Now, auto insurance doesn't prevent car accidents. Safe driving does. Homeowners insurance doesn't prevent fires, but it'll make you whole in the event that you have an incident or you have a disaster or a peril. But the key here, guys, is to remember that insurance policies can be complex. Now, what you might think is covered may not be covered.
Right, because not all policies are the same, and not all locations are the same.
That's right.
Something that is in a fire zone might not have or might need different coverage than just a neighborhood in the middle of the city somewhere. And
those gray areas are really the parts that can hurt somebody and cause them to put their guard down, thinking, oh, I'm covered, no problem. You can't just turn a blind eye. Let me just break some things down with regard to insurance. Insurance companies, a lot of people don't like them. They think, oh, they're just getting rich off us. I'm never going to use that money. I'm never going to see it again. But really, we want insurance companies not to make a killing off of us, but we want them to be healthy. We want them to be profitable because they need to have a surplus to pay claims. When a tract of homes catches fire, when an area catches fire and multiple homes are covered by the same insurance carriers, there is a lot of resource that goes into that. It's not just the rebuilding of the homes from the fire or the flood or the earthquake. It is all of the the resource, as I'm saying, goes into it ahead of time. All the claims, all of the adjusting, all of the investigation. There's so much that goes into that they pay out of pocket. I don't want to feel sorry for them. They build this into their model, but we have to remember that there is a cost to doing that type of business. And I mean, if I was to just self-insure and I had a $500,000 home and it burned to the ground, I had no insurance, I'd need another $500,000 at least.
Sure.
At the very least, just to rebuild the home. Not to mention, if I was displaced, where would I stay in the meantime? Because homes don't erect overnight, last I checked, unless you drop a box on your property. And there's a whole bunch of things that go into this. And I think that's where the value of knowing some of those intricate and integral parts of the homeowner's insurance make a difference, because then you won't feel like the person who has a paid off home that says, I don't really need insurance.
Right. Don't you think then we're saying to our listeners that we need to stress test our policies, look at 100%. Our policies and say, all right, I don't want to presume here, I don't want to assume, I want to make sure that, God forbid, something should happen, like literally less than a week ago for some people here in the Santa Clarita Valley. Stress test our insurance policies so that we know what is coverage. Maybe we have too much coverage or not enough in certain areas. I know that there are categories that are not always covered.
That's right.
Categories of natural disasters, if you will, hazards that, fire, I suppose, if you have fire insurance, it would pretty much cover you for fire, but maybe there are riders or something that need to be added to a policy if you're in a certain brush fire zone or floods.
Right.
I owned a house and it was at the top of a hill, and I was surprised that we were required to have a certain kind of flood insurance, and I still don't understand why. It was the top of a hill, so if we flooded,
right,
you would be looking for Noah in the ark because everything underneath you. But that was eventually changed. But earthquakes and maintenance, various things are not always covered, and
that's right.
People need to know.
And I think especially those of us in Santa Clarita and various parts of Southern California, there are more fire hazards in this particular part of the state because of how dry it is, because of the droughts, because of just the nature of the topography of the land. We do have a lot of areas that are susceptible to catching fire. And part of that is, we've seen the history. I've been in this area for, I would say, the last 8 years. And when you live in the high desert or the outskirts of the high desert, you're going to see brush. You're going to see things that you go, wow, that would catch fire really quickly. And so insurance companies know that, and certain carriers will not insure certain areas unless certain criteria is met. And what I mean by that is you may be in an area that is susceptible and more susceptible to brush fires because you're up on the top of a hill near an area that hasn't seen water in Lord knows how long. And then the other part of it is you may be so far removed from a fire station, so the distance between your home and a fire station can affect your premiums or whether you can be covered or not. How far away are you from a fire hydrant? That makes a difference too. Sometimes, in excess of 1,000 feet might pose a problem, or if you're closer, it may even reduce premiums a little bit. So each carrier, as we all know, is going to be a little bit different. They'll have their little nuances of what they prefer as a risk, and it's kind of a weird thing to say, you're a preferred risk or a not preferred risk. I mean, risk is like, hey, that's not something that many people want to take on, but insurance companies, they're in the risk game. So they qualify risks, they quantify risks, and then they base the cost of covering those risks based on those factors.
So we really need to say, we need to ask whoever it is that we deal with insurance, we need to ask some very pointed questions to make sure we know. I don't think we get hurricanes here in Southern California very often, or tornadoes, but there are areas of the country where they really need to know if they have a tornado, if they have a hurricane, sure. Am I covered, or lightning? I'm not sure all the aspects of what gets covered if there's a lightning strike, which we could have.
Well, and to your point, asking questions, I believe, is paramount in the success of having a policy that fits you. And I think in all walks, if you're not curious and you just kind of meander down the road, right, finance or insurance or otherwise, you're kind of just checking boxes. That's not the way to go. relying solely and 100% on your agent, although they may be a wonderful human being, I've seen it where, and I'm sad to say this, that someone in my family had a policy that they had for several, I mean, we're talking decades, or policies with a particular agent that worked for a captive company. She was an agent, or is an agent still to this day, probably 3 decades plus by now. Her father was in the insurance business. She basically inherited that book of business and perpetuated it and grew it and did well. But she gave some, I want to say, some information that wasn't wrong necessarily, but it's the little what ifs, it's the gray areas that I think that can really mess somebody up. And when we discovered that, because someone brought me their policy and said, hey, can you take a look at this? And I said, sure, no problem, take a look at it. And I started asking questions, and they said, well, I don't know. I said, I don't expect you to know that, because you're the insured, but the agent should know. And then when they went back, the information that they received wasn't definitive and clear. And so what I encouraged that person to do was to just contact the carrier and get a copy of the policy and then ask those pointed questions. So it doesn't mean that they're good or bad people. It just means that they may be ill-informed, or it may be an area of their practice that they don't really visit all the time.
Sure. And you know, here where we live, earthquake is a big deal. I mean, there are those who have earthquake insurance, there's those who do not, and there's arguments on one side and the other. I do know the San Andreas fault is primed. It's actually moving, and they're saying, wow, it's overdue, etc. But there are other earth movement events, not earthquakes, but earth movement, that are probably not covered by anybody unless they anybody's policy, unless they have a special rider. Earth movement like a landslide, a mudslide, or sinkholes. Have you ever seen these shows at the news where something just opens up and swallows their car or their garage or the back of their house? And that,
very scary,
as I understand it, unless they're especially covered, that earth movement, like an earthquake, is not covered unless you specifically have done that.
And some states actually in the United States require that all policies have endorsements or riders. And let's cover a couple of those things here. A base policy in our industry, you know, they have like the HO3, HO4, HO5. Those types of things are with respect to a single family dwelling, a condominium. If you're renting an apartment, or someone else's dwelling, you would have some type of renter's insurance. Those are all the base policies.
HO being homeowner.
HO being homeowner, correct. And then the different levels are assigned those different numbers. Now, a rider is in addition to that. An endorsement is in addition to that, and sometimes those, in a lot of cases, I would say, cost a little bit extra money. So, if the insurance company is willing to take on a risk for a certain amount of dollars, then you want to add things. That's usually going to cost you a little bit of premium. Now, look, when the differences are negligible, you know, a few dollars here, a few dollars there, I think it's worth it in a lot of cases, especially if you're trying to protect something like your primary residence. If you're a person that has a lot of valuables inside of your home and you keep them in your home, which, where else do we keep them? If we have where we lay our head, we usually keep our valuables and whatnot. So those types of things make sense to insure. Now, the policies themselves, they may have limits. They may say, look, we're going to cover all of these things, but only up to a certain point. Now, you're going to want to say, look, if I have personal property, which is covered by your homeowner's policy, then you may want to look into some of those valuables. They may say, okay, we'll cover up to, because some people do this, they keep a lot of cash in their house, we'll cover up to $5,000 in cash. Now, I think that's pretty aggressive. You should probably keep it in a bank or a safety deposit box or various institutions, whatever have you. But I can think of somebody right now that has 5 figures in cash all the time. And I said, what if there's a fire? And they just kind of look at me with that glazed over look. Don't say that.
Deer in the headlights of the truck, right?
Yeah, and you know, the whole ignorance is bliss thing, I don't necessarily agree with that when it comes to money. I mean, that's something you traded your time for. You exchanged your labor, and that was you quantifying your labor, as you've so eloquently put it in your book, Power Tools to Slay the Money Dragon. You're welcome. I think it's a great concept. So that remembering that we can attach our time that we'll never get back to those dollars, and then we just kind of keep it in a place where it could go up in smoke, literally and figuratively. That's kind of a scary thing. So take a look at your policy. It's not an exciting thing. It's not always fun, but it certainly is in your best interest when it comes to protecting your valuables, especially where you lay your head at night. How many people are we looking at right now that probably are going, oh my gosh, I hope we had the right coverage with these fires coming through, with whatever else is coming that way.
The smoke damage. I mean, maybe the fire,
yes,
they were protected, but the smoke damage is for real.
And smoke damage is also part of that. And I don't want to say 100% definitively. You always want to check your policy. That's my little asterisk and my little disclaimer. But most policies, homeowners policies, cover fire damage, even smoke damage. Even if something didn't go up in flames, it may still be damaged and unusable.
I found out when I was looking over the general things in homeowners policies, that things like your sewer, if you're connected to the city sewer system, you are responsible for the lateral, for the sewer pipes, the pipeline between your home and where it connects to the city sewer somewhere in the street. So if there was a major event and that broke, you'd have to know if your homeowner's policy covers that major expense, and usually, it doesn't. Or at least you should know.
It's interesting you should say that. One of my family members, when I was, gosh, I must have been a teenager, I'm recalling this.
4 or 5 years ago?
Yeah, at least. Thank you. Had that issue, and they were just relegating it to the city's problem, saying, no, that's not my problem. That's not. And when the city comes back and says, hey, you need to fix this because your thing caused this, and we don't really know whose fault it is, but the fact remains, something's broken. It's on your land, and we can call this our pipe up to this point, but and I think the problem was the parkway. The sidewalk, the parkway, the easement. There's like, where's the? Then again, to my point, the gray area, the gray line there was blurry, and I don't remember how it panned out, but I do know that there was some out-of-pocket money from the homeowner, which nowadays we're starting to see so many homes are being built or have been built, and they're attached to sewers and
utilities, gas lines.
So many things are older than the homes that are being built. So you may say, look, I have a 25 or 30-year-old home. That's not that old. I owned a home that was built in the 70s, and it was pristine. They did an amazing job of preserving it, but I didn't know what the pipes underneath looked like. So those types of things, you have a newer home, but it's connected to older systems. That is, and we're seeing, and you can read articles by the dozens about older pipes and rainwater collections that go together with sewer that back up.
And they even flood up into your house.
And they flood back into your house, and now you're the one that's being posed with the problem here. So newer policies, we're seeing a lot more now, and carriers are becoming more aggressive. They're covering some of those things. But again, when you have the option to up some of those coverages, I would say sewer line coverage is probably one of the best places, and the first places you should start to up the ante. Sometimes it's a $5,000 coverage, and then they put a cap on that. Anything above that, that's your problem. If you can up it to 10,000 or 15 or whatever the limit is that they'll cover, you may want to do that, especially if it's only a couple dollars extra.
It's not going to be $5,000. It's going to be a couple dollars to add that.
Yeah, exactly.
So here we have a stress test on our insurance. I'm thinking, you guys don't sell insurance, this kind of insurance.
No, we're licensed to consult on it.
Right. So just like our house, our physical house we need to stress test that insurance and what's covered. I would think your financial house, if you will, needs to be stress tested, and that's where somebody like you would come in and say, okay, we need to ask some questions about our portfolio, where our investments are, even if it's cash under the mattress, right?
Sure.
Whatever just like there are stresses on insurance and fire and earthquakes and all that kind of stuff, likewise on portfolios, right? People don't They assume something, or they're like, hey, I'm just trying to keep my head above water. I'll worry about retirement in 20 years when I retire. That's right. The wrong time to worry about retirement.
Yeah, when you're supposed to be crossing the finish line and you realize they keep moving the finish line out a little further, and you're saying, what's happening? If you've ever gone to our website or seen any of our advertisements, Total Financial Solutions is about integrating your financial life. That's been our tagline for as long as I can remember. Integrating your financial life means taking a look at your coverages for insurance. Do you have enough coverage on your auto insurance? Do you have enough insurance coverage on your home? Those types of things can make all the difference, whether you're pulling money from your would-be retirement savings or your future dollars to cover a need for today that could have been satiated by a few dollars extra or a different coverage over here. Those are the types of things that Total Financial Solutions would love to help you with. You can always get a hold of us here by going to the radio station, hometownstation.com, or you can call us, 753-9683, 661 area code, 753-9683. We're going to take a quick break. Richard, I want to touch on your the stress test on your financial portfolio, your financial house.
My personal one?
Not yours,
okay.
Not yours, but to your point in your book, and we're going to talk about that when we come back from the break. This is Total Financial Solutions, Safer Money Hour on your hometown station. Richard Lewis Grant here, along with Jeff Gerard. This is the Safer Money Hour on KHTS.